So it's now my pleasure to introduce our keynote panel. We're going to talk about the role of renewables in increasing the competitiveness of the mining sector. It's my pleasure to introduce the chair of the panel. Mike Am is co-head of Tory's Mining and Metals Group. He specializes in M&A, corporate finance, high-yield debt, joint ventures, and streaming royalty transactions in the mining sector. He has significant experience with both domestic and international transactions, including acting for major China-based clients.
Great, thanks very much, Adrian. Just to kick off our panel, I'm going to start by asking each of the panelists to briefly introduce themselves, and then we're going to go into a series of questions and answers in a bit of an informal way and see if we can provoke a little bit of a debate amongst us. So I'm going to start with Dwayne, please.
Hi, good morning. My name is Dwayne Parnham, Executive Chairman of Gainey Gold. It's a junior resource company here in Toronto. Predominantly, I've worked my career in Africa, so in this discussion, I'll be coming from more of a less developed African perspective when we look at these energy needs. But my forte has been looking at undervalued assets and applying managerial, financial, technical expertise and upgrade them. I'm not an expert in mining. I apologize, guys, but through my career, we have done a number of pre-feasibility studies and feasibility studies. So looking at the energy needs and how technology, has a play in developing these projects, we certainly looked at that.
Javier.
Hello, I'm Javier Vaquerizo. I'm the commercial officer of Enel Green Power. It is the renewable subsidiary company of Enel Group that is a big European utility. I have 16 years of experience in the renewable business in different European utilities, mainly in the business development side and then in the energy management and the commercial side. And these new commercial offices recently created just to focus on commercial and industrial PPAs in order to foster and to push for further growth of our big renewable portfolio. We have 11 gigawatt installed capacity, and we are pretty active in wind and solar, but not only in those two technologies, but also in geothermal and hydro. So we have all the technologies, quite big geographical footprint. We are in more than 18 countries right now. So,
Thanks, Javier. John.
John Carson with Altera Power Corp. We're an 819 megawatt renewable power producer. We have our operations based in British Columbia and in the United States and in Iceland. We are not currently serving any mines today. However, we've met with several and had several interesting dialogues, some of which are still here, and there are some in the room that we've spoken with a time or two. The chairman of our company is Ross Beatty, who, as some of you may know, has a good presence within this space. So we do maintain a dialogue. Most of our growth today is in the United States due to the existence of tax incentives there for renewable power projects. We are strictly green, and that's why we're here today.
Thanks, John. Don.
I'm Don Bubar, President and CEO of Avalon Advanced Materials. Many of you probably heard me speak earlier. A little bit further background on myself. I'm a geologist. I've been in the industry as an exploration geologist in Canada for nearly 40 years now. I've been CEO of Avalon for 20 years now, actually, struggling to create more shareholder value for our shareholders in the long term, and have focused for most of the last 10 years on these niche market commodities that are critical to clean technology, including lithium, rare earth elements, and others that are vital also in renewable technology.
Great, thanks, Don. Just before we get into the questions for the panel, just to set the scene a little bit for what we're going to be talking about. I think one of the key themes that has come out of the end of the commodity super cycle and the recent downturn in commodity prices is how, and this really affects the industry as a whole, and that is how can we be more sustainable and competitive through all parts of the cycle, so that next time when we hit some lows, we are going to be able to do a lot better in terms of pulling through it and withstanding the stresses. And this is, when we talk about sustainability and competitiveness here, it's really a holistic concept that we're looking at, and it really relates to all aspects of the mining cycle, from exploration, development, operation, M&A, financing, CSR. We're really looking to be more sustainable in all those areas. And one of the key places in which we can look is trying to bring more renewable power into the mining sector and looking at the various benefits that that can bring in terms of flexibility and reliability of operations, environmental footprint reductions, and of course the most important for all of us is the reduction in terms of cost and the enhancement of reliability in operations. So with that kind of a backdrop, we've got a great panel that's going to look at these issues both from the miner side and the renewable power provider side. So we're going to get a broad perspective, and we're probably also going to get just a little bit of clashing here, some friendly rivalry and competition as we walk through the questions. So with that, let's start with the first series of questions. So, and this was really about the place of renewable power in the current mining environment. We've obviously had downturns in commodity prices. We've seen miners look to reduce costs and look to the benefits of renewable power. And I'm going to start with Don, and I'm going to ask Don, when you look at how things have changed at this part of the cycle that we're in, and how miners look at renewable power, what has changed, and how do people look at it now?
Well, when you're in a down cycle, access to capital gets harder, and costs become more and more of a factor as the revenue side starts to decline with lower metal prices and revenues from your operations. So you're kind of forced to look for ways to reduce costs. And energy is a big part of your operating costs on any operation, including at the exploration stage, as I was explaining earlier. So that's basically encouraging looking at other alternatives and thinking outside the box a little bit in terms of how renewables could be used to accomplish that goal. Obviously, it's still early, but as I was explaining earlier, I think the exploration stage is really the right time to start to implement that type of thinking, to get it kind of that stimulated within the company at other levels, to start reviewing all operations and where efficiencies can be created elsewhere in the operation, perhaps by taking advantage of renewables, but not in any way possible. And so there's plenty of scope for that, and a down cycle certainly encourages it. Another example, actually, of where renewables can be looked at in the mining cycle, I talked about the front end of the cycle and exploration. Obviously, there are examples in operations. There's also the closure part of the mining cycle, and there's a real opportunity there now with a lot of closed sites that involve large-scale open-pit mining operations, many of them in parts of the world that are very sunny, have lots of potential for solar energy, and one of the models that's being looked at that I'm aware of is turning some of these closed open-pit mine sites into vast solar farms and creating a new use for that site that makes it sustainable in the longer term, and that perhaps generates a source of revenue to offset some of the ongoing costs on environmental remediation at those sites. So maybe that's an opportunity for my colleagues here on the panel.
Well, let me ask Dwayne, we've seen lots of good opportunities in the space, and Don has outlined a number of them. How competitive do you think they are going to be for miners both now and looking into the future?
I review sort of these issues as being jurisdictional because, you know, a lot of these renewable energy ideas and alternatives and technologies are good in certain parts of the world and maybe not so good in other parts of the world. So from a competitive edge, I see it as a good way to augment sort of the conventional power methods right now. So from a mining perspective, I mean, when Don gives an example of using an open pit, well, that's not so good when you're in the Yukon or somewhere up there where you don't have sunlight, you know, 24/7. But it may be more advantageous in Africa where I work, where sunlight is plentiful. So, you know, you got to really look at these opportunities, and they're also site-specific to each mine's needs. So I don't know if they're really competitive, but I think there's a real opportunity for miners to look at these renewable resources as a way to augment conventional power sources and perhaps even, you know, reduce costs in certain ways. So something to look at.
So in terms of the competitiveness, why don't we ask the guys who are pitching these systems? John, let's start with you.
Surprised to be called a pitcher this in the morning, but I'll take that. I'm kidding. So, you know, the competitiveness of them really has increased. I think earlier this morning we had heard that capacity factors from wind, for example, have now crept up into well into the 40s. We just placed a wind farm, one of those wind farms in Texas, into service last December, and it's a 45% capacity factor wind farm. We're planning on putting another one into service next year that's going to have over 50% capacity factor. So that's really a reflection of a strong resource, of course, but also new technology. That's what's making renewables more competitive for mining, for on-site renewables, which is just you get more megawatt hours or kilowatt hours, however you're measuring, for the dollar that it takes to put it in service. The equipment's not much cheaper on the wind side. It just puts out more power these days. On the solar side, the equipment's just much cheaper. So that's one aspect to talk about, and I'm going to plant a seed now for the other way in which I think that renewables can be competitive for mines. If you don't have to have an on-site behind the fence project, if you can source power elsewhere, if you have connectivity to the grid, as many do, that opens up a whole other window of opportunity to make renewable power projects happen and to put them under your bailiwick, so to speak. And so I'd like to get to that at some point during this conversation, Michael.
Absolutely. Javier, from your perspective, tell us what your views on the competitiveness of renewables versus conventional. What would you tell people, and have you seen a difference in the European perspective?
Yeah, I completely agree with my colleague because we have to differentiate and to face probably the opportunities for the on-grid mines and the off-grid mines. So now the mining sector can leverage on the experience of the utilities, of the developers in the commercial and industrial PPAs that last year in the United States we saw the record. So for those kind of solutions, I think that we are on the right track with a very low PV modules costs. This kind of big improvement on the wind load factors are not only in Texas, but we have some projects in Brazil, in Europe also, and for sure in the United States with the same load factor, nearly 40, 45, 48%. So at the end, the technology is there. So I think that we have to go one step beyond and look for the fine-tuning of the solutions. So in terms of bankability of the projects, try to bring the lenders and to explain which are the risks, which are the best way to share, in order to share those risks, and try to define these new solutions from a very tailored and specific point of view. So for me, the competitiveness is something that depends a lot on the supply strategy of each mining company. So for the utilities, the developers, it's very important to know and to understand the mining business. So we are not experts, I guess, so we are going to try to understand and learn a lot these couple of days. To understand the business, the mining business, is key in order to properly assess the risk. And risk is related to price, and price is related to bankability. So I think that we have the opportunity to make these tailored solutions together with the mines. But I think that we all agree after this International Energy Agency presentation that the renewable revolution is something that seems to be unstoppable, and it's just a matter of cost. So okay, we have these policies, this support scheme in place in a lot of countries, but it's a matter of cost reduction. So having that first layer, first step, I think that the second one is to focus in defining the tailored solutions and working the details.
So I'm going to ask Dwayne, we've heard about the opportunities, we've heard about this unstoppable trend, we've got the technology, and the cost is going down. What are the impediments? Why hasn't renewables taken off more than they have to date?
Yeah, well, again, I mean, I don't think the renewables at this stage is going to replace the conventional power sources for operating mines, because you know, you need reliability, you need peak you have to match peak demand cycles for mine startups, crusher startups, you know, depending on the type of operation, the size of operation. You know, I just don't think renewables right now can replace the consistency of a power grid. But I do see it as a way to augment that power grid. So you can have a microsystem in a mine that can, you know, help load periods. So, you know, lights underground mine, lights in the offices, things like that. But I just don't know if it's there, the technology is there to start up a crusher and do these peak demand. So until the technologies advance to that point, I don't see a replacement just yet. But obviously, technology is advancing, and I think it's you know, it's something that augments the existing grid.
So if we've got some time then for the technology to catch up, let me ask Don, you mentioned earlier that it's important to start planning your renewable strategy early at the exploration stage. Don't wait until you're on the eve of operating. Can you tell us a little bit about that, and perhaps your experience with what you're doing at Avalon in thinking about renewable opportunities and preparing the pathway for future implementation?
Yeah, all that experience allows you to start to think about it and how it can be applied in the next situation or as the mine evolves. And if you're going to take it into production, then you can start looking at introducing it, and maybe it can't replace the diesel power generation or connection to the grid as your primary source of power, but it can start to reduce your costs and over time presumably become incrementally and a more and more important part of your operation as it's introduced and people start to see the benefits and apply creative thinking on how it can be ultimately expanded in how you use it going forward. Another opportunity, you mentioned connection to the grid. That's a really interesting one because in remote sites you're not connected to the grid, but sometimes you can be close to a small community that might benefit from being able to get access to lower cost power and not have to rely on diesel themselves. And we see that in a lot of remote communities in remote northern Aboriginal communities in northern Ontario that are stuck relying on diesel fuel too and would really rather not. And that's a real opportunity for the mineral industry going forward, is to build an operation with that vision in mind of being able to take advantage of renewables to supplement their power needs and eventually be able to share that with the local communities so they reduce their reliance on the on fossil fuels as well.
So Don, following up that back to Dwayne, talking about remote locations with unreliable power, and Dwayne, a lot of the work you've done over time has been in Southern Africa in jurisdictions that have those issues. How do you see the potential of renewables there?
Yeah, well, I mean, look, when you're, Don's point is a good one, where when you're looking at developing your mine from the exploration to the pre-feas, the feasibility, and then the operations. We're always looking at social responsibilities. We're looking at environmental impacts. We're looking at, costs, obviously, is the big, we're going to talk about that, all day. So, yeah, I mean, the impact is going to be benefited from the mine as we go forward, and new operations are going to benefit more than perhaps some of the older ones. And so where I've been working, here's a good example of what's happening, not only with these social benefits and these economic situations, but also political issues. So you look at South Africa. Historically, South Africa has provided some of the cheapest power for the mines in the world, and have gone through a very extended cycle in the 60s, 70s, into the 80s. But now, they're going through hell, because that cheap power is generated by coal. And with signing the Kyoto Accord, now South Africa is going through a real hard time with the political changes that are going on, trying to meet the demand, and where coal is not as an acceptable source of power so much today, and looking for alternatives. And the alternatives on that scale are overwhelming. So you're looking at nuclear power now, which is very costly. They haven't found enough offshore gas to go into the gasification power like we're looking at in Namibia. But, alternative power sources on that scale is a huge problem. And you know how many mines have been affected in South Africa today, and the investment has been drying up and things like this. So, the renewable technologies to hook onto the grid in South Africa, it would be one alternative. A lot of sun, you got a lot of wind, you got a lot of right environment for and wave activity in the coast. So in that particular location, there is need for, or at least a good opportunity to look at renewables in that case. Namibia, what we're doing there, I just attended a conference in Namibia, and renewables and green power is really is a real movement there. They don't get government subsidies like some of the other countries, but with the investment environment today, there seems to be a lot of companies like the gentleman up here today that are working in the country and really making an impact on providing much needed power into their grid. So, you have a lot of sun, you have a lot of wind, you got a lot of wave activity. So the renewables are really working well there.
Thanks, Dwayne. So I'm going to ask Javier, with these types of opportunities, including the ones that Dwayne and Don have outlined, how do the renewable power developers look at these opportunities beyond just the general, and actually look at putting them in place and look at presenting them to miners?
Okay, I think that from an utility perspective, there is a very important point, that is policies. And talking about South Africa, and I think it was mentioned in a previous presentation, we are not talking about incentives, but clear rules. So for example, wheeling rules in South Africa are quite uncertain yet. So I think that that is one of the reasons why these kind of agreement PPAs with on-grid mines in South Africa are not still in place. So the lack of a clear regulatory framework in order to sign those PPAs and be able to settle those PPAs with these wheeling rules. So these kind of policy developments are needed in some markets in order to make these kind of opportunities feasible. Regarding the off-grid mines, I think that is a matter of an engineering challenge for some places. I think that storage is one of the main drivers in order to build reliable solutions, but the costs are still quite high. But talking about these, I have to say that the utilities, we are working a lot on the storage side with a lot of pilot projects, but it's not only a matter of batteries, it's a matter of SCADA systems, software, in order to be able to optimize the performance of a hybrid wind-solar storage facility. Because we understand that the requirements of a mine are quite different from other kind of takers. So we have to understand that our previous experience with the automotive sector, with the food and beverage, or connected to the grid, easy, are more a trading game. So, and it's easy for us as an utility to play that trading game because we have a lot of experience. But for these kind of solutions, off-grid mines, we're talking about very challenging engineering solutions. So we have to test, to innovate, we have to look. So in Enel Green Power, we have a lot of pilot projects with different technologies. We are testing different kind of control, remote control system, different kind of SCADA software tools in order to optimize the battery charge, discharge, the PV modules, the small wind turbines, the microgrid itself, using our experience in the smart metering side. We are the first player in this kind of smart meters deployment in Europe. So we know that we need a learning curve to provide solutions to the off-grid mines, to work also on the bankability. We have these portable solutions. We have a lot of ideas. But for the on-grid mines, I think that for some markets it's a matter of clear rules. And I think that probably that part of the mining sector is going to be the first mover. And we are going to see some PPAs in the near future, for those connected mines.
So Javier, you mentioned that having the right regulatory system, the right framework of rules is very important for these types of projects. So in your experience, which of the main mining jurisdictions are better set up than the others for that right now?
I think that probably, I mean, the well-developed markets, like, I don't know, in which you have clear willing rules, access to the grid, market schemes in which you can hedge your risk, so you can define and offer more complex and structured products to the off-takers. So you can share the risk better because you have the possibility to hedge in an OTC market, or you have on the spot market. I mean, European markets are well developed. We have this oversupply problem right now, but
Unfortunately, there's no mines there.
There's no mines there. But no, there are mines, but not so big. Of course, the South African mines are huge, but Australia is is a good example of a well-developed market in which you can provide those kind of solution. Of course, United States, Canada, Chile, for example, is another market in which we are pretty active. But I feel that for those markets, it's a matter of the rules that are not still in place, like, for example, clear willing rules with ESCOM in South Africa and with the municipalities. That is very important too. And also it's a matter of the new regulatory development, so how these policies are going to change the environment and the rules because sometimes those changes, in case of any kind of oversupply situation in some markets, are short-term solutions that for sure are not helping the deployment of the renewable energies.
So a question for John. In terms of your offering at Altera and the solutions that you guys are looking to provide, can you describe for us your approach and your model to doing this, and how you are pitching to the various operators?
Sure. I can do that. It's very bespoke, though, i.e. for every particular situation, the answer could be quite different. And that's why, though we've had conversations about behind-the-fence systems for direct support of a remote mine, we've also been in conversations with very remote sites from the mine. And those are situations where the mine is on the grid. So I can illustrate my answer to your question by illustrating the versatility that we have as to how to contract. There's a spectrum of contracting that can exist between the renewable project developer and operator, i.e. us, and the miner. If the miner has a connection to the grid, one of the ways that we've always thought about procuring power has been a take-or-pay power purchase agreement. Every kilowatt hour that's generated by the solar plant, by the hydro, by the wind plant, is paid for by the miner. Those types of contracts are becoming a relic in the modern OECD countries that you mentioned, the more well-developed markets. And that trend is growing. As developers, like peer companies to my company, Altera Power, have learned how to assimilate and accommodate certain risks that offtakes are unable to completely absorb themselves, there's a new symbiosis in contractual relations that exists now. And I'll shut up in a moment, but I'd just like to illustrate what some of those are, and some of those will resonate strongly with you. For example, basis risk, the risk that where my project is injecting its power and what price that occurs at, versus where the power is being withdrawn, perhaps it's quite a distance away. That can be a big delta on how much the power costs at those two locations. That's a risk that's now being shared by many developers like Altera Power. Also, shape risk, the way that the power is delivered over each hour of the day. That's a big problem for a miner to say that you're an intermittent source. I don't need an intermittent source. I need a continuous source, as you were stressing, Dwayne, which is, of course, true. However, what can happen in a liquid grid is that the power developers, such as ourselves, can say, well, I'll contract with you. I will deliver power at these times when I promise that I will. If I'm not blowing, the wind farm's not blowing that day, or the sun is not shining, then I'm going to have to make up a little bit. And then on days when the wind is blowing strongly, or the sun is shining well, I might make some extra. At the end of the month, we'll settle all accounts. This has become a very common contractual way to do it. So I think just my encouragement, Michael, to everyone would be, and this is how I'm saying that Altera solutions are very bespoke. The risk dialogue, the risk allocation dialogue has a bunch of new windows that it didn't have just 5 and 10 years ago. Over half the contracts signed in the United States last year were with corporate offtakes, not utility offtakes. The model has changed. People have learned. It's not easy, but it certainly creates a new versatility that wasn't there before.
So versatility and flexibility, that sounds very, very promising coming from the developer side. Dwayne first, and then I'm going to move to Don. Each of you guys, in terms of your impressions of having dealt with these renewable developers, both your own and other companies that you talk to, how are you finding the versatility and flexibility is working for people?
Well, I've never signed one, so this is kind of outside my expertise. But I'm encouraged from what I heard because, again, that's sort of the reliability that needs to be patched between the conventional source and the renewables in matching the mining needs. And, not only the costs again, but also reliability and a constant supply that the mines need. So I'm sorry, I can't really answer that question, but maybe one day I'll be able to.
Don?
Yeah, I haven't done a lot of negotiations with providers of renewable power either, actually, so I can't speak from that perspective. But another observation I'll make is a lot of times these contracts seem pretty complicated, mostly because of the variability in how much power you can generate and kind of getting that sort of timed right for when you actually need it. And not having a mechanism for storage to kind of smooth out those variations, particularly in renewable power generation. And that's the key going forward, I think, for increasing adoption of renewables at remote sites is energy storage, that technology catching up so it can store more of that renewable power and smooth out the needs at different parts of the demand cycle in the operation. And as I spoke to briefly this morning, help is on the way. That technology is starting to finally catch up. The sad reality of it has been is it's lagged behind, dramatically so, as we've seen here in Ontario, where the government has encouraged greater adoption of renewables and generated lots more renewable energy, but we can't use it all and are giving it away because we have no way of storing it. So once the storage technology finally catches up, then I think that's going to be a huge catalyst for greater adoption of renewables at remote sites.
One of the things that we've been talking about and people have been asking about is the generation of more power than a particular mining operation may require. And I'm going to ask, starting with John, how often do you see that? Do you see it, or do you see opportunities for a renewable source of power to provide more power than the mine needs, to provide other people with power? And then we're going to go to Don and ask the same question, but in terms of the community engagement and opportunities to help local communities by doing that. John.
Well, that's the first thing I'd say, is that Don kind of paved the way for that answer originally when he indicated that there could be a relationship between a community and a mine, and if the project were oversized to the mine's needs, or the mine's needs were periodically diminished, then the community or the grid could be the recipient of that power, and that's a good situation, potentially. I think, Michael, it would be an unusual situation for a mine to have an oversized facility, but certainly not, inconceivable. Think of net metering for solar facilities on people's roofs. Controversial as it may be at times, the same concept holds on a large scale for mines that have that type of facility. The other thing is that if you are, again, connected to the grid, and I'm thinking there should have been two panels, one to address this question for off the grid and one to address it for on. But back to on, here you'll find people who are actually aggregating contracts, and effectively they're making a business, but a company like Salesforce, not a mine, but still a power purchaser that doesn't actually own many of the recipients of its power in the end, but it's striking up very large, hundreds of megawatts of contracts with renewable power companies. I think once, if you have a sufficient critical mass of projects and or business in a particular locale or globally, you have a real enhanced level of diversity and ability to do different things with that power on a mega or meta basis, or on a very localized basis, such as the example that you gave, Don. So a lot of interesting things to do and to think about with the oversized project.
Don, from a community engagement perspective, what are the opportunities?
Well, I think there's lots of opportunities now for mineral development companies and remote communities to partner on common solutions on energy generation and storage going forward. And it provides for a powerful way to create that relationship that's often difficult to establish with a remote community that sees this mineral developer coming in as more of a threat than an opportunity in terms of impacts on the environment and their traditional lifestyles. But if you can establish a relationship based on partnering on something of real common interest, and that is a better source of energy, reduce reliance on fossil fuels and bring down costs, then you've got a really good basis for a dialogue there. And there's a number of different ways I think that can probably be modeled going forward. The mining company could take the lead on it and generate that power and sell the surplus into the community, or the community could take the lead on it, create a power utility, build that power generation facility, and sell it to the mine. So I think both of those are possible depending upon what the resources are in any one area. And maybe it's not necessarily wind and or solar. It could be hydropower now that run-of-river power generation is coming along, and undeveloped hydro resources in other parts of the north. And you just have to look to northern Quebec for the best example of how hydro development in the north can economically empower a First Nation and make a huge difference to everything. And looking at the James Bay power development in Quebec, Hydro-Quebec, that was a very visionary project at the time. The visionary was Robert Bourassa, but the other visionary was the late great chief Billy Diamond of the Cree Nation, who saw the opportunity as well, established that partnership, and used the funds that were made available to that First Nation to create an industrial enterprise there that's made the Cree Nation the economic powerhouse of northern Quebec. It's a total transformation in the economy up there for that community, and it was all enabled by renewable power generation in the north. And of course, that was an exceptional resource. They don't occur everywhere, but it can be done on a smaller scale now because of the new technology that's been created on power generation and energy storage going forward. So I just see nothing but positive opportunity there for service providers and the mineral industry to take full advantage of that going forward.
Dwayne, similar opportunities that you see in Southern Africa for that?
Yeah, from an African perspective, social responsibility, you've got remote mine sites, generally have remote towns, so that's generally where your labor is going to come from the mine. So although, I mean, even with my own experience, we don't want to own towns. There's been examples of that in Namibia. Rio Tinto is a good one, and we don't want to own towns. But I think from the social responsibility perspective, that by providing renewable source of power, which is much different power than a mine site, and certainly sustainable, create a better quality of life, and that better quality of life breeds health, breeds education, and it breeds an elevated level of skilled that the community will benefit from. So from that African perspective, absolutely, that'd be a real benefit.
Great. We're coming to near the end of our panel now. What we're going to do just before taking questions is a little bit of a lightning round with our four panelists. And it's going to be a two-part question for each of them. The first part is, what, in your view, how do you see the next 1 to 3 years in terms of the development of renewable power? That's part one. Part two is, what's the most important element to making renewables succeed? And Adrian is going to be taking notes so that when we're all back here next year and for the next 3 years, we can see who was right. And we're going to start with Javier.
Okay. The following 3 years, regarding the fact that all the past forecasts are wrong, I think that low probability of being next year pointed out as the one who made the mistake. But from my point of view, I think that even though these boom and bust cycles are there for sure in every business, I think that we are going to see, let's say, more balanced growth between regulated auctions and let's say governmental support schemes, and we are going to see an increase in the commercial and industrial offtake part. So as we have seen in the United States, and I think that it's going to be a trend worldwide. So now I think that the policymakers are quite aware that with a little effort, without these big incentives, they can change somehow regulatory frameworks and make these commercial and industrial offtake possible. So I think that that is going to be one of the main drivers of the future growth. And regarding this, I think that the complexity of the structuring of these PPAs, as we have seen in the United States, with these basis risk sharing, shorter terms, fancy structure like tracking accounts, collars, and so on. Why not to think about future PPAs with mining companies indexed to commodity prices, to metal prices? I think that we have a huge possibility and future in front of us in order to better analyze the risks and the opportunity to fix our proposals to the real needs of the mining companies.
Don, are you equally bullish?
Well, I said it before, I'll say it again because you can't overstate this point. Energy storage is the key, and energy storage technology is coming along so fast now. It's coming to the rescue of all of us that want to see reduced reliance on fossil fuels and energy efficiency generally, and it couldn't come fast enough. And it's not just the lithium-ion battery, it's getting the most publicity these days because of electric vehicles coming along pretty quickly too, and home energy storage being another application of that. But there are other energy storage technologies being developed too, the vanadium redox batteries and things for large-scale energy storage for the grid, and that's a game changer. Complete game changer, and that's what's going to accelerate a more rapid adoption of all these creative new technologies and renewables going forward.
John.
Echo that, and you can put me in the bullish camp. The technological advancement is a game changer with the storage. I agree with you, Don, absolutely. And with the dropping of the power prices, the price for dollars per megawatt hour has just really changed the game. It's very fortunate for the renewable power developers like us, because we're facing a time when worldwide everyone has realized we're sitting on a lot more harvestable natural gas than we ever thought that we had, which is a big roadblock, a big headwind for companies like us. At the same time that we've had this pleasant dovetailing of lower prices for the megawatt hour from renewables. It's good for miners, it's good for us. Really, we just have a more refined dynamic to work from, a new playing field, and as you mentioned, Javier, the contracting refinements and abilities and risk sharing all give us a very interesting playing field to work from for these next 5 years. So I'm bullish. It's going to be interesting.
Last word from Dwayne. Do you agree?
There was two parts to your question. I'm not sure we got the second part. I can't even remember it. But anyhow, I'm going to answer. I'm also bullish. I think interest rates are going to stay low. Access to capital is always going to increase. Technology is going to advance. Whether energy prices get lower or not, I don't know. They don't seem to. I mean, I pay my bill every month, and it doesn't seem to go down. So so I think no. I think naturally you're gonna see, prices stay the same. So I'm really excited about new technology also, and I think that's the world we live in today, where technology is advancing at a rapid pace, and commodity prices look really good for the next 3 years or more. So, we're back. I mean, we're happy up here, and I think unless something happens here, Trump does something crazy and gets the Chinese too pissed off. I don't know, but. Right now, like I said, interest rates can't go up too much. So that's going to give us capital to fund these technologies, and it's going to advance, and hopefully we'll see lower prices down the road.
Well, Dwayne, that was a great answer to both questions. Adrian, do we have time for any questions from the audience?